Hi, I'm Mike Capizzola, and you're watching Smart Money, the show that gives you the inside edge on the bets that the movers and shakers on Wall Street are placing. This week, we're looking at a company with an $800 million market cap, which is aiming to bring the Internet of Things into the heart of commerce and logistics. That company is Impinj. The Seattle-based firm aims to bring the power of networked communications and tracking down from the cloud out to edge computing and the Internet of Things into physical items. This allows users of their tech to identify and track items, to locate goods for transit and shipping, and to protect and safeguard both the items and the data related to them. Impinj manufactures tagging RFID chips that provide goods with unique identifier codes, readers chips that add read-write capabilities to otherwise dumb items, enabling communications with other connected devices, and specialty readers that can interface with and check the credentials of shipped goods and shipments in transit. They overlay these physical manufacturing activities with software that manages gateways and sensors, data transfer, and chip encoding. The more information an end user has about their inventory and supply chain, the more efficiently they can use them, whether that's in transportation, retail, disaster management and relief, baggage tracking, or the manufacture of domestic appliances. Third quarter 2020 numbers from the company showed revenues of $28.2 million, down on 2019's $40.76 million, largely thanks to COVID. The company continued to invest in sales, marketing, and R&D despite the downturn, so costs remain similar to, if not slightly ahead, those seen in 2019. The net result of that was a loss of 63 cents per share in Q3. That said, the company has now beaten Wall Street's earnings expectations on 4 occasions in a row. Price-wise, the stock has been picking up of late, making gains of just over plus 19% in the last month and plus 37% over the last 3 months. Despite that, the stock has been trading below its 2020 and 52-week highs found at $36.56. From an analyst's standpoint, Wall Street rates the stocks as a buy, with 3 buys and 2 hold recommendations among the 5 analysts that follow the name. The consensus forecast price target is $30, meaning that Impinj stock is trading well ahead of forecasts. That outperformance doesn't seem to have deterred some smart money from adding to their holdings in the stock. Hong Kong-based hedge fund Celebra Capital has been buying. The fund is a long-term investor and has board representation at Impinj. The chief investment officer of the fund, Dan Gibson, is a main board director of Impinj and has been since June 2018. In the last week, the hedge fund bought 391,743 shares in Impinj at a price of $31.09. That represented an investment of $12,197,000 and took Celebra Capital's total holding to just over 4,397,000 shares. Impinj is no stranger to hedge fund investors, and at some points in 2020, more than 20 funds have had an interest in the business. However, Celebra Capital seems to believe in the long-term potential of the stock. That might not play out overnight, of course, and will likely need the economy to begin to reopen fully before it can. But a marker has been laid down here, making Impinj a name to keep track of over the coming months. That's all we have time for this week. Of course, these remain uncertain times, so please remember to do your own due diligence before making any investment decisions.